In the world of kind of free market thinking, there's a phrase that is often, misquoted and quite often not very well understood. It's this term from Joseph Schumpeter about talking about creative destruction. People who have a bad impression of big companies and CEOs, they tend to, and capitalism in general, they tend to focus on the destruction part. But I think the people in this room focus on the creative, right? We understand the creative part of it. We understand that, sometimes business may fall so that others may rise. And our next speaker, he understands the creative part. He gets it. He's been in business for many, many years, has been recognized by in the former Federal Republic of Germany with Commander's Cross Medal. But he constantly reinvents himself. As an angel investor, he has been investing not only in businesses of the old school, but also in the new economy, the internet economies, and has had an absolutely tremendous track record and has tremendous perspective. We would like to welcome him to the stage now. He is, of course, a pillar of the WBAF community. Please welcome Mr. Peter Jungen. Your time is now, sir. Yes, sir. Please, let's have a welcome for him. Thank you very much, Peter. Come and join us. The podium is yours.
Thank you again. Good morning. I'm not sure whether that is a debate which takes the right turn. I don't think that CEOs who want to get into angel investing should wait until they just have time.
Yes.
Angel investing is about transfer of entrepreneurial experience, of networking contacts, and of capital, and in that order. So it's very important to get on early and not just to wait until you may not anymore interested or able to understand the trends and the tremendous power of what was just mentioned of creative destruction. On the other hand, we're living in a time where it's probably a time which we have never seen in this world or even in all the people before us. Simply, this world is growing faster than any time in history, and since the fall of the wall, the world grew by 3.5 times, the US by 4 times, Europe by 2 times, and China by 28 times. What does it all tell us? It tells us that this is a completely different ballgame. 120 years last year were growing faster and grew faster than in the year before. So the world economy is in a better shape than ever before in history. What is driving this is innovation. In about 1780, GDP per capita in the world was about the same as 10,000 before Christ. Just think about this. So whatever is in the world today, in terms of material goods and well-being and longevity of people and so on, it's been created since, so the last 240 years. Therefore, what is driving innovation is the key question. To understand this is the difference between invention and innovation. So the one is turning money into knowledge, acquiring through research. And the other is turning knowledge into money. So some parts of the world are very good in turning money into knowledge. This is for the US, this goes for Europe, and this goes for China. But not all of these regions in the world are very good in turning knowledge back into money. And that goes for the US, but Europe is certainly more difficult. So capitalism, which is the system, should be rather called innovation economy. I think that really is the difference. And the demise of the Soviet Union shows this very clearly. The missing link is the entrepreneur, and therefore, to have more entrepreneurs is the best contribution for higher innovation pace. How do we get more entrepreneurs? We get more entrepreneurs where people are ready to take a risk, and that is a society which is risk-taking, which honors risk-taking, and not a society which probably asks people to stay sort of and walk in the middle of the road. That is the difference to successful societies in the future. In terms of startup numbers, Europe is lagging behind tremendously, behind the US, and now even behind China. So we see tectonic changes in the world, and many of them are created by entrepreneurs using new knowledge acquired through research. So I think the change agent is a precise description of what an entrepreneur is. And therefore, we need a winner culture, but we also need a failure culture, because 70% of all startups don't make it for the first 5 years. So if they do not survive, we have to understand that failure is an important part of the innovation process. People who failed at least have tried it once, compared to other people who've never tried it, and they never know what failure is. If a prevailing attitude in a society is not to take risks, which is more and more spreading in Western Europe, in the EU, whatever you would like to call it, then you won't have a lot of entrepreneurs, and you won't have no entrepreneurship culture, you won't have innovation, and particularly not innovation pace. So it's not surprising that of the 500 largest companies created in the last 30 years, almost none has been created in Western Europe. Majority of them have been created in the US. Now for the financing of innovation, you need risk capital, and for financing startups, you need sort of a capital which is ready to invest in the highest risk asset class, and that is in startups. So, as I said, they invest entrepreneurial experience, networking context, and capital, and it is therefore not surprising to see angel investing have mushroomed in the last 20 years. Not all over the world, but in some. So the angel market in the world is undergoing a substantial structural change. You will see more structured angel network, you will super angels, you will lead angels. You see, and therefore is the combination of entrepreneurial experience, of different experience in industry important in order to cope with the changes in long distance and cross-border, with syndication and of angel network. The syndicates also allow the cross-border or long-distance angel investing, which is not possible and wasn't possible before. So if CEOs would move into that area, I think they bring in a particular experience with. That is, they have a global view. They can help entrepreneurs to get this kind of a global view and start a business with the view of the global market. Knowing the market or markets is probably one of the biggest problems for startups, and therefore the entrepreneurs need this assistance. When we see, for instance, in technology, that 80% of all IPOs or tech exits today are internet-based in the ICT. So here we see that there is a dramatic change, and know-how in technology is very important. Europe needs 6 to 7 million new entrepreneurs. How do we get them? We only get them through angels who help to generate entrepreneurs, but also entrepreneurs helping to generate are angels. To see those trends globally, regionally, in technology, political need, so is the need for diversification. And here, I think the know-how of entrepreneurs fits in very well. The sharing economy, to understand the basic approach of platforms, so making better use of existing assets in mobility, in virtual reality, in AR, in VR, in IoT or IoT, the Internet of Industrial Things, and so on, is very important because there they can bring in a lot of know-how. Who can be an angel, or who should be an angel? I think it is very important to understand the impossibility of spotting a winner and the impossibility of predicting which startup is not going to fail. Therefore, they need to have a resilience to failure. As for the returns, 80% of angel returns are from 10% of the investments. The return of 70% of the investment is less than 1 times money, which is, in other words, a loss. 45% is a total loss. So it doesn't look very attractive to move into this. And the question is, do angels make money? I've got to warn the people who made a lot of money in their career. The answer is simply majority not. But on the other hand, what we learned is from a study on US angels, is 55% of angel investors were previously CEOs of companies or executive of companies, or started or helped to start another business. What we see is angels are almost everywhere, at least angel material. Angel investing is a team sport, is to do it in groups. And therefore, it is so important to understand the relationship with a climate for angel investing and economic dynamism in a society. If you see the latest numbers for 2017, we have seen a tremendous jump in VC and angel investing across the world. Is for the first time now, Asia is investing more than the US, the first time in history. The total volume last year is about 170 billion in the VC, and the numbers for angel is very, very difficult to get, but maybe the 50 billion may be a right approach. But then there is 3F money, family, friends, and fools, which according to Jeffrey Sowell, the probably best angel researcher in the US, is even larger than the 25, 26 billion angel investing alone in the United States. Interesting is in the last quarter of last year that all 10 top financing in VC happened in China. Why is this important? The VC rounds are an important exit for angel investors. So angel investing will move there where there are chances for a best exit. So it's not difficult to predict that we will see a mushroom of angel investing in China, which we see ourselves as we are co-investing in an angel fund. In China, we see an explosion from 3 billion to more than 40 billion in China within the framework of 5 to 6 years only. Europe is losing pace, not only in investing relatively in VC and angel, but in particular in the number of startups. There is the best estimate, no official numbers, that we have about 10 to 12 million startups a year in the world, of which half, 50%, is in the United States. Angel investing is very much about assisting execution. The great news for CEOs to come in, they know about execution. The bad news is that they know about execution and may tend to replace the entrepreneur himself or think that to sort of micro-manage a startup, which is very awkward and very difficult. The best advice for people who want to get in and how to get started is to look on tons of startups. So they should start very early. If they want to make 2 or 3 or 5 investments in their lifetime, forget it. Probably 20 is not enough. 30 investments is much better. So we are in a numbers game. And someone jokingly said, in God we trust, all others must bring datas. And I think that is a very appropriate saying. The portfolio theory of angel investing confirms that we need to have these large numbers of investment. To get started, join a group. To get started, join an angel group, get more sophisticated into a structured network, and with this, having the chance to also get into cross-border and long distance and in the global. Develop a deal flow. Early on, it's a matter of network. Why is it so important? The world is probably looking into an even better phase of economic development. But I can tell you, there's one great thing about angel investing, and this is a very similar thing. An angel investor is like being a grandpa, which I am. Is the kick of the startup without having to work 24/7 yourself. And I think this is an important recognition of the work of the entrepreneur or like young parents. So don't mix and don't get involved in the micromanagement of the company, but use all the experience to support the people and confirm in what they're doing. There is no other better team sport in the world than angel investing. And with this, thank you very much for listening to me.
There we go.